Well, let's get straight into it because we've got the banana skin survey putting the spotlight on the dangers that currently face the banking sector. Explain to us what exactly we're looking at here and how it gets surveyed.
Alishia, this is a survey that we do biannually. It's a global survey that's run by PwC and by the CSFI. It's a non-profit organisation in the UK, and it's run globally. So we've got over 700 responses from over 40 countries. South Africa participated this time. We've got 7 responses from South Africans banks in the response, but it's a global survey, and they, as you said, they get asked 30 questions. They get asked to rate the preparedness of the banking sector and then comment on any concerns that they may have.
Well, when it comes to the international front, I mean, it's no big surprises. The kind of risks that rank at the top 3 of these, from a global perspective, we've got macroeconomic risk, credit risk, and liquidity, and that very much to do with all that's going on in the macroeconomic environment globally, specifically where we've got the Eurozone at the epicenter.
Yeah, I would agree. I don't think anybody was surprised with macroeconomic risk being the top risk identified. We've seen the package that was agreed yesterday by the Eurozone finance ministers, but it's still a big risk for participants, particularly those that's operating or has exposure to the European Union. Credit risk kind of falls after that, because the credit risk is your exposure to sovereign debt, and a lot of European banks and UK banks have large exposures to European debt. And then it's also what is the spillover, the indirect effects of any European disaster going to be. So I think that's again not surprising.
There are differentiations to be made though, because what we've seen is evidence again of the 2-speed economy that we're looking at on a global basis. So we've got banking executives in emerging markets certainly more positive on their outlook than those banking operatives within the developed economies.
Yeah, and I think that's a very valid comment, and we make that comment in the report, is that it's definitely a 2-speed economy, and although the risks of China is being highlighted by some as well. So what will happen if a Chinese economy starts faltering, and what will happen to those banks in that economy? I think, sorry to interrupt you there, I think the other interesting bit is liquidity. Yeah. Liquidity that was 5th ranked last time, now 3rd ranked this time. And again, there we get disparity of responses. If you look at the responses from the US banks saying they are very liquid, they don't have any concerns from a liquidity perspective. But then the European banks have a lot of concerns from a liquidity perspective. Yeah. And then again, emerging market banks, not so much, and particularly in the South African context, it didn't make it onto the top 10.
Yeah, so we're talking about disparity in perspectives. Let's put the kind of focus that South African banks have right now, because what's interesting is that we've got banking executives on this end concerned about the costs of fighting fraud and economic crime more so, and it's a very different issue that's front of mind for global bankers.
Yeah, so just to recap, in South Africa, the number 1 and 2 was also macroeconomic risk and credit risk, and we can talk about those now. Fraud and criminality was a surprise. It was a surprise to us as well. I guess it's maybe not that surprising given what we've seen, what's happened to the Post Bank and the reported frauds that the banks have reported in their debit card business, their credit card business, and online fraud. So I think it's very much been a focus of banks to curb those losses. And if one add all of those losses together, it comes to a staggering amount.
And it's a catch-22 that they're sitting in right now, because on the one hand, you've got technology that's being used to make banks more efficient and possibly target, the non-banked community of South African clients, and then on the other you've got the cost factor that comes hand in hand, and the skills set that you've got to be having in place to actually mitigate against some of these risks you've highlighted. No,
exactly. So banks are spending an enormous amount of money on IT, and we've reported on that previously, and that is for exactly the reasons that you've said. A, to be more cost efficient. B, to be more innovative and reach those previously unbanked through electronic channels, for example, cell phone banking and online banking. So I think that is, and then they get targeted in those same channels by
Yeah.
fraudsters, and therefore have to spend more money to make sure that it's secure and prevent them from access.
You touched on liquidity ranking number 3 when it comes to global concerns in the global community. In South Africa, I mean, the response to liquidity risk is significantly more positive than the survey average. And, many will say it's owed to tight regulation, and that shows that it's in fact needed. It shows that there's a benefit and there's an upside of that. But worldwide, we've got regulatory oversight that continues to be one of the top concerns facing the sector.
Yeah, so if we touch on liquidity in the South African context, we are a closed economy with the banks and corporates funding the banks. So there's research being conducted that shows that 90% or more of the funding comes from internally in South Africa. So yes, we're not exposed to the funding worries that the banks overseas have as much as they. Secondly, regulation. Yes, regulation has caused that. So, for example, the regulation on Basel III will make it more difficult. So I think although banks are saying they don't have a liquidity issue, they have an issue with regulation, and particularly the liquidity framework that's being imposed by Basel III.
With all that's gone on within the global banking arena, does it surprise you, this kind of perspective that's out there, that they feel that regulatory oversight is just too high?
I think you're in a difficult conundrum, because on the one side, banks are trying to lend to customers, but on the other side, the capital and liquidity measures are being increased, which prevents them from doing those long-term transactions that they would like to do.
Yeah.
So I think banks are in a difficult catch-22, and governments and regulators are pushing in different regions, because the governments, particularly in the Eurozone, would like banks to lend more so that they can kickstart those economies into space. However, on the regulatory front, they are required to hold more capital, and that again then stifles growth from a lending perspective. So you've got a very difficult balance that has to be achieved by politicians, regulators and banks at the moment.
Certainly, it's a factor that's going to have an effect on the trading book and funding models of banks moving forward. Johannes, let's leave it there. Thanks so much for your time.